At Impact First, we combine social impact with Israeli high tech.
What do you consider to be impact startups?
So impact technology is basically the use of science and technology to benefit people and the planet.
You developed a kind of impact measurement and management tool for early stage tech startups.
The tool that we developed internally, it's more on the complex side.
When do you measure this impact?
We look at these factors before we make an investment, but also after we make the investment, we want to make sure that we are able to measure it.
So you think impact startups are mainly concentrated in US and European market?
The reason being that these markets are more mature when it comes to the startup ecosystems.
What to pay attention to while they are seeking for different impact funds?
If you are truly an impact startup, don't come in with an SDG logo on the pitch deck, but be able to tell me why you think that your impact company is going to make a lot of money, and grow just like any other startup pitch that would come in.
Sounds like a formula on how to build a good impact unicorn. Good day to everyone. This is InnMind channel with the best first-hand information for startup founders and tech entrepreneurs. And today our guest is impact tech investor, who really contributes a lot into the development and growth of impact investment industry in Europe. And not only a Spanish investor who invests in Israeli tech startups, Melina Sánchez. Hi, Melina.
Hi, Nelly.
Thank you very much for accepting our interview invite, Melina. And I want to suggest you to start with the brief self-introduction about your impact investment focus and criteria.
Yeah, for sure. So hi, everyone. My name is Melina, and I'm an investor at Impact First Investments, which is an impact tech venture capital firm based out of Israel. And at Impact First, we combine social impact with Israeli high tech. So we believe that impact technologies have the potential not only to deliver the financial returns of traditional venture capital strategies, but also contribute positively to society and the environment through the solutions that these startups that we invest in provide. So this is, in a nutshell, our strategy. In terms of the investment focus, I'll speak a little bit about what impact tech venture capital is in a bit, but to give you a sense of what we're after, we look for successful founders and startups that traditional VCs also look for, but that have that additional layer of intentionality and also a product or service that can grow in its impact as the company grows as well. I think that this is, in a nutshell, what we're looking for, but I can definitely give more details about the type of startups or founders that we are looking for as you wish.
Yeah, that would be awesome if you elaborate on that a little bit more. But before that, it would be great to clarify a bit more on what do you consider to be impact startups. Actually, I was, while preparing for this interview, I was reading your post in Medium. Melina has a blog in Medium, and we will put the link under this video. The post was about the impact tech startups in the list of 50 disruptive technologies by CNBC, I think. It was very interesting angle where you actually brought attention that those startups which we do not obviously consider to be impact oriented, they are really social oriented and they can be considered as impact investments. So can you please give some kind of definition or understanding where is the impact startup and where is something similar but not really?
Yeah, sure. So impact technology is basically the use of science and technology to benefit people and the planet. And when we're talking about impact startups specifically, there are three main characteristics. The first one is, as I said before, the intentionality. So it's not enough to create a company and by default or on the side create some impact. So there are, for example, companies that have these 2-for-1 models where as I sell one product or one item of the service or the product that I'm producing, I might provide an additional one to, say, a segment of the population in developing countries or whatnot. That's a side impact. What we are talking about is intentionality based on the product that the company is servicing. So think about, for example, a healthcare company that has a software that is monitoring the healthcare of or the cognitive decline of elderly people over time based on different parameters, like, for example, location patterns or voice patterns. So the more that the healthcare providers and care managers are monitoring these people and proactively targeting them, the more impact that this company has, right? So it's integrated. That's also something that we are looking for as another characteristic, that both the impact and the business model are interlinked in lockstep. So as one grows, so as I sell more of my product or more of my service, I create additional impact. And then finally, that technology has to be core to what the company is offering, right? That's the impact technology side. It's not enough to just have an enabling, app that might or might not be linked to what I'm offering. It has to be fundamental to what I'm trying to build. So those 3 characteristics: intentionality, the technology, and also that link between the core of the product and service and the impact.
Mm-hmm. And by intentionality, you mean a kind of mission statement of the company?
So that's a good point. I would say that investors think about intentionality in different ways. It might be enough to just get a founder that pitches to you and says, "Oh, this is something that I deeply care about." But then I think that investors can judge, in that pitch whether it's truthful or not. So, for example, I get a lot of founders that simply put a sustainable development goal image in their pitch deck and say, "Oh, we are an impact company," and in reality, they don't even know what the sustainable development goals are, right? So it is a judgment whether the intention is there or not, but sometimes you can base it off previous experience, other experiences or projects that the founders are involved in, and how much they know about the industry.
Mm-hmm. And I also know that in impact first investments, you developed a kind of impact measurement and management tool for early stage tech startups. How does it look like? Is it a kind of methodology which you can share with others? Is it a tool like Excel sheet with some formulas pre-installed?
Yeah. And even before I answer that question, this is actually one of the challenges and at the same time questions that I get a lot about impact tech venture capital. So a lot of people say, why would you have to measure the impact? Isn't it enough to just measure the financial returns? I mean, that's what VC is all about, right? Yes and no. On the one hand, we are also looking for those financial returns, and just as we measure the financial returns of a company, based on the unit economics, the operational data or whatnot, we need to ensure that the impact is also being tracked in a similar way. The good thing about how we think about impact in that interlock model is that a lot of the operational data also indicates impact data. So for example, when the healthcare example that I mentioned before, as more patients are onboarded into the system, you could say that it creates more impacts, right? So it's linked and you don't need to ask for like a ton of additional data. Or in a healthcare company where the success of the company is based on the clinical trials, right? And whether they work or not, that's also, related to impact. So the more effective the company, the product or the service in those clinical trials, the higher the impact, most likely. So I wanted to mention that because when it comes to measuring, there are different ways of measuring as well. Some are more complex than others, and the tool that we developed internally, it's more on the complex side because at the beginning we wanted to be very rigorous about how we measure, but over time we realized that for founders, especially early stage founders that, need to pivot their business model a million times before the next round, or that are really occupied with, growing the business, getting more clients in, or developing the product, their time spent on impact and measurement is going to be limited, if not, zero. So we need to make it easy for them to understand how to think about impact, if not now, as they grow the company, and to be able to measure some key milestones without making it too complicated. So the tool that we developed, to go back to your question, looks at 4 different aspects. The first one is SDGs. That's the North Star for us and for some of the other impact VCs out there. And what that means is not just saying this company is contributing to SDG for education, but what a specific target or indicator it is actually contributing to. Then we look at ESG, which for us is more internal impact. So for example, diversity within the company, that's a classic example. And even in early stage startups where there are a couple of founders only, that doesn't mean that we wouldn't invest in an all-male company, but we would invest, or we would ask them to think about, as they grow and as they hire more people, how are they thinking about their diversity? And then the other 2 pillars that we look at are additionality. So how are they contributing to the impact ecosystem, and also impact risks? Are we sure that they are gonna, keep that impact at their core over time, or is there a possibility that, as they find other revenue streams, they might deviate from that? Or is there a risk that, if the company fails, that impact is gonna disappear completely? So those are some of the factors that we look at in that model. But, just to end with these, it can be a lot more simple than that. And a lot of impact VCs only track a few KPIs, and that's it.
Very interesting. And when do you measure this impact? Before taking decision to invest, or after, in order to kind of track your portfolio companies in this regard?
Yeah, that's a good question. So during the, before that we make an investment, we already look at some of these factors. So we look obviously at diversity within the team. We look at, how the product and service is connected to the impact that the founders are saying they have. And we look at these other factors that I mentioned as well. And that's part of our investment process. So, and just to take a step back here as well, as an impact tech VC, doesn't mean that we use impact simply as a filter. That's not how we do it. We use impact as one more factor in the decision-making process. Again, I want to emphasize that impact technology also delivers competitive financial returns. So, as well as looking at market size and trends and the product market fit, we also look at impact. So just wanted to put that out there. So yes, we look at these factors before we make an investment, but also after we make the investment, we want to make sure that we are able to measure it. And, as I said before, when you make an investment, you track your financial returns, right? The valuation of your companies over time. Why wouldn't you do the same with impact?
I have never thought on this, but yeah, it's an interesting angle. Indeed, investors always have to track valuation growth, etc., and then they can track impact growth. But if they do it, how can they benefit from this? This is additional tax exemptions or whatever?
That's an excellent question, because as an investor in the impact field, for me, it's just so self-explanatory. I feel that I don't even have to explain what the benefits of being an impact company are, but obviously it's not clear for the rest of the world. So I would say there are some key benefits of being an impact company. The first one being talent attraction and retention. These days, millennials, my generation, we want to work for companies that we feel connected to, right, from a values perspective, and that motivate us to keep working and contribute in some way to a bigger purpose. And that's a trend that, you know, a lot of companies have identified. And if it's not through, you know, the typical corporate social responsibility, volunteering engagements that big companies offer to their employees, it is, you know, through a startup that is trying to solve a real, you know, social environmental challenge. So the benefit is clear. You know, by being an impact company, you are going to attract not only, you know, hopefully top talent, but talent that is most likely going to stay for longer and be more productive. So that's one. Two, the additional pool of capital, right, that you might be able to access, that traditional startups are not accessing. And with that, what I mean is that impact startups, if they are good, they're going to receive money from traditional VCs, just like they're going to receive money from impact VCs. So as we, for example, co-invest with other companies, or VCs or investors that might not necessarily have impact at their core or in their evaluation, but, you know, are also identifying great companies. So these impact startups should have, you know, that access not only to traditional VCs, but also to impact VCs. That's the second benefit. And then obviously branding and marketing, right? Consumers are, you know, looking for products that also reflect their values. So products that are more sustainable, products that are greener, products that are more socially responsible, right? So the potential not only for marketing and branding, but also to expand your target customer base, or potentially to increase that willingness to pay, is also a benefit from these impact startups. And I can go on and on and on, but I think that those three should also make the case.
Yeah, definitely. Just guys, keep in mind if you are watching this video, it is indeed very good to be impact startup, because you can benefit a lot if you use it also for marketing, for PR, for attraction of your audience, but don't focus on only marketing and PR, because I see quite a number of companies who talk about impact a lot, but don't actually do this on the background. That's the reality.
Yeah, and if I may stop you there for a second, that's also real risk, right? That's what we call in the impact industry, impact washing, right? When companies, yes, market themselves as impact companies, but in reality, there is nothing behind that. And eventually, either customers or investors, they are gonna notice, they are gonna know. You know, we know when people are just talking or walking the talk. And once you are on top for, you know, doing this impact washing, you know, your position in the market might not be too positive moving forward.
Impact washing, amazing expression. Thank you very much. You enriched my vocabulary. I will use it for the next time. And just finalizing about startups and how to assess them. Can you please elaborate a little bit more on your criteria and your decision making? So what kind of startups you are looking for? Because I'm sure our video will be watched by many impact focused startups, and how should they understand if they should apply to you on it's not a match?
Yeah, and I guess this is a good segue also to mention that we are fundraising for a fund that is going to be looking at a similar universe of startups as Impact First. And we are right now also developing our internal framework on what type of companies and specifically segments we're going to look for moving forward. In terms of, you know, generally types of startups, we are early stage investors, so we invest in mostly seed, Series A, sometimes pre-seed as well. I already mentioned we look for, you know, companies that have that intentionality and impact, but obviously companies also that are what we call basically following the trends of the future. And with that, I mean, you know, trends like sustainability challenges, trends like aging world, trends like, you know, crisis in healthcare, trends like, you know, the future of food. So those types of trends that speak impact, but also have outsized potential to create big companies and potentially the next unicorns of the world.
So actually, this is quite a broad focus. You are not focused on one certain technology stack or certain industry. You are industry agnostic, sector agnostic. You look for early stage startups, just to summarize, who really want to make an impact and who have potential to grow into a billion-dollar company.
Exactly, yeah. So we are sector agnostic, but we do have, internal preferences on themes that we are very excited about.
And by the way, if, given that you mentioned that your fund is fundraising now, a short free volunteering integration. If you are angel investor or private investor watching us on YouTube, and I know quite a number of investors are watching our channel as well, please consider becoming LP or contacting Melina. We will put the contact details and the profile link in the description. It is a great opportunity to invest your money and make some impact for the society. Integration finished. So speaking about the investors, so can you please give better understanding the difference between impact investor and traditional commercial investor? Because a lot of people think that traditional ventures are for high profits, and impact investors, they don't need high profits. But if I understand you correctly, this is not true. So what is the difference then?
This is not necessarily true. And that's why, I need to do a lot of market education and market building, because there are so many nuances. It's like saying, every VC, it's going to make a lot of money. And that's just not true either, right? So impact investing is a very broad term. You can do impact investing in, for example, public equities. You can do impact investing in private equity. You can do impact investing in social enterprises in developing markets. So there are a lot of different asset classes and strategies that fall under the term impact investing. And if you think about it as a spectrum, some of them are going to prioritize impact, and some of them are going to prioritize returns, or try to have this blended model of, interlock impact and profits, as I described before. So for example, a foundation might be doing programmatic investments where they might still invest in a company with the objective of getting the capital back, but not necessarily make money beyond that. And then you have, on the other side of the spectrum, impact tech venture capital, which is perfectly positioned to create both that impact that we are looking, outsized impact because of technology, because of network effects, because of borderless, our borderless world and how technology can be expanded all around the world, but also that impact angle. So in that sense, impact technology is one type of impact investing asset class that is not as well known, which makes it very exciting. And I can tell you more about trends later if you want, but I think that within the impact investing types, this for me is the more exciting one.
And then what are the popular incorrect stereotypes or conceptions of impact VC firms? We mentioned already one, that it is not necessarily not oriented to the high profits. And what are the rest?
Yeah, so another stereotype, generally because it's usually so attached to the traditional term of impact investing, is that even on the venture capital side, they only invest in companies, say, in Africa or in Asia or in Latin America, in developing countries. And that's not necessarily only the case. Again, there are VCs that are focused on those markets, and some of them also have VC strategies where they try to deliver, the 3+X that VCs try to deliver. But a lot of VCs, actually the majority of impact tech VCs, are located in the US and Europe, mostly in the US, because of the maturity of the market, and they invest in local companies. So I would say that's another big misconception in the industry. There are impact startups everywhere around the world, and mainly in the US and in European markets.
So you think impact startups are mainly concentrated in US and European market?
Well, the reason being that these markets are more mature when it comes to the startup ecosystems, right? And if I may tie it to another misconception, is that impact startups are not a different class of startups. A lot of people, because of the early stage nature of the impact tech industry, they think of impact startups as one segment. It's like saying, fintech companies, climate tech companies, then healthcare companies, and then impact companies. And no, impact can be integrated literally in any startup if they want to, more on the external or internal side. And with that, I mean, there are some companies that are going to have impact at their core, and some companies are just going to be responsible, with their employees, with their footprint or whatnot, right? So it can cut across, any sector, if the company wishes so. And then, because the more mature startup ecosystems are in the US and in Europe, just the most number of startups are there, then you also find the most number of impact startups as well.
That's very interesting. Actually, maybe it deserves another separate discussion on this topic, because on those impact investment conferences and events, which I attended personally in Switzerland and in Europe, a majority of startups selected and presented there were from India, Africa, Latin America, saving elephants somewhere, or rural areas somewhere. So it is different with the concept that they are concentrated in US or Europe.
Well, that's perhaps how the industry started, and that's why perhaps a lot of the representation you've seen has come from those countries. But if we think of a company like, I don't know, Beyond Meat, right? What are they trying to do? They are trying to make the world more sustainable by substituting meat with alternative proteins, right? That's a clear impact proposition. It's in the DNA, and they track it. It's internalized who they are. And it's a $1 billion company, right? So definitely, and that's just one example. There are many cases like that. It's just that people don't think about them as impact companies, and they don't need to think about them as impact companies if they don't want to. But for us, impact investors, those are the clear targets that we are looking for.
Amazing. Melina, can you please give some advice to startup founders, given that there are so many different types of impact investors, how to find the best match, or what to pay attention to while they are seeking for different impact funds?
Yeah, so doing research on the impact fund is obviously very important. A lot of founders come to us, not knowing exactly what we are looking after, and it's as easy as just looking at the website, right? How are we positioning ourselves? What type of sectors we might be looking at if we publish that on the website? What is our portfolio like, right? Is the portfolio similar to us in any way? That can give you an indication of whether you might be a good fit or not to begin with. And obviously it's not the only factor. And then, if you are truly an impact startup, don't come in with, an SDG logo on the pitch deck, but be able to, tell me why you think that your impact company is going to make a lot of money, and grow, just like any other startup pitch that would come in.
That sounds like a formula on how to build a good impact unicorn, or maybe it's also the topic for another interview. And by the way, your investment focus lies on startups with Israeli roots or ties in Israel. Why so? Why do you think Israel is a special hub for impact tech startups?
Yeah, yes, and that's definitely something that I failed to mention before. We are specifically investing in Israeli or Israeli connected entrepreneurs, so they don't have to be in Israel. They could be in the US, they could be in Europe, they could be in other geographies. And first of all, it's because we are based in Israel, and that's where our knowledge and our relationships are, right? As simple as that. But I think that beyond that, Israel has an amazing startup ecosystem. I mean, that's why it's called the startup nation to begin with. The technological innovation that is being, developed in the country has also such a potential for impact in many ways. So, for example, the technology that is developed in, intelligence units or, in terms of cybersecurity can be translated to other sectors and other applications for good. And we've seen a lot of that happening in the country. Israel also has a lot of knowledge in very specific sectors. So, for example, it's a leader in agtech technologies, upstream, for example, as well as healthcare. And I mentioned cybersecurity, increasingly more in fintech. So it has a center position in some of these industries around the world that can also, again, be used for good. So that's why we are so excited about the innovations that are coming out of Israel.
If it will be European startup matching your focus, but not having yet Israeli roots, will you consider it or not really?
So we would not consider a European company that has no ties with Israel whatsoever. We have to define our investment, universe somehow, and for us, it's very important that there is that connection. So if you're an Israeli founder in Europe, we will talk to you. But if you are just a European company, we will not.
Mm-hmm. Melina, I have so many more questions to you, but I remember that our time today is limited, so maybe I will leave them for another interview. And the last question for today, can you give, please, some advice to startup founders on how to become attractive to impact investors? If you already think that your startup will bring a lot of impact to society or to the planet, and you don't know how to attract the right investors to you.
Yeah, so first of all, focus on your business, right? Focus on, because you're not gonna deliver impact if you don't focus on your business first, right? On that product market fit, on securing those first clients or pilots. So focus on that, first and foremost. And then when it comes to reaching out to impact VCs, there are a lot of impact VC events or impact investing events out there where investors try to scout for startups. But even in traditional events, you might find impact VCs as well. So for example, my team and I participated in this Agri-Food Tech Summit organized by the Israeli government. The Israeli Startup Nation Central. And, it was a combination of impact and non-impact VCs. So you'll find us everywhere. We are not, a unique group of people. We're going to be out there just like any other VC in every event. So come to us.
And if the startup puts in the presentation some special medals like agreement with United Nations or on something which do not have any connections with the revenue stream, but adds additional impact flavor, will you be excited with these additional moments, or they don't make a big change?
So for us, it's not about the labeling, right? For us, it's about, again, the intentionality and that what you mean when you say impact, right? What is exactly that you're impacting? Who are the stakeholders? How realistic are you about your short-term and long-term impact potential? So if you add that in the presentation in one way or another, even if it's, very high level, be prepared to defend what you're saying, if we ever meet, for a pitch.
Okay, thank you, Melina, very much for your answers. And guys who are watching us today, keep in mind, if you are building something really impactful and if you have any connections with Israeli, not even you are from Israeli, but maybe you have good ties there, approach Melina, approach Impact Investments First Fund, and they will become good partners to build an impact unicorn. Thanks, Melina, a lot.
Thank you so much.
Ciao.
Bye.